dig deeper on what moved those stocks with Bloomberg's equities reporter Stephanie Hughes. Stephanie, Dollarama beat. It is opening new stores, but shares slipping. Tell us why.
Yeah, that's right, Marella. So Dollarama shares fell by over 5% at its lowest point today, which marks its biggest intraday drop since last December. And like you said, even though the discount retailer's earnings per share for the fiscal quarter came ahead of what analysts were expecting, and there were double-digit growth in new store openings, and on top of that, they maintained their fiscal 2026 guidance. Some analysts theorized that shareholders might be disappointed that that guidance wasn't raised for the fiscal year. So TD Cowen analyst Brian Morrison called the quarter solid and said that the maintained guidance implied to him and his team that the company has still attractive long-term growth runway. That said, he added that it might be initially overshadowed by the lack of upward revisions on that fiscal 2026 picture. He added that just even leading up to the quarter, in his preview note, analysts or the street had really aggressive expectations on what the guidance should look like or the earnings should look like. And he said that, yeah, well, technically these expectations were achievable. He added that maybe they should be dialed back a bit. So it seemed like solid quarter in Morrison's words, but maybe being in the red initially because of that initial disappointment, Marella.
Okay, let's also talk about Canada Goose reports of an offer. Fill us in on how that stock responded.
Yeah, it doesn't seem like there's any disappointment here, Marella. Those shares were boosted by over or nearly 18% at its highest point, which biggest boost since May, and it helped the company recoup pretty much all of the losses it sustained since late July, when at that point it reported earnings that showed deeper losses than expected and set the company to a tailspin. But different story today. CNBC is reporting that the company's controlling shareholder, Bain Capital, said it received take private bids that valued the company at $1.35 billion. To put that into context, that offer values Canada Goose at about 8 times its 12-month average EBITDA, or earnings before interest, taxes, deterioration, amortization. So even so, our Bloomberg analysts, even with that price tag figure there, our Bloomberg intelligence analyst said that bids at that valuation appear low, just given the company's turnaround potential, which I found really interesting, Marella. But yeah, it's double-digit gains for Canada Goose, really finding its wings there.
All right, we have Bloomberg's Stephanie Hughes with the latest on the market. Thanks for that.